All right, so we're back into earnings season. I like talking about earnings. So we had some big companies release this week too, so I wanted to get right into that. The first one, probably the biggest one, or at least probably the most followed one, Tesla. Tesla's earnings were actually not too bad. They're at record revenue. The one big problem they face is their operating margins are down because they have lowered prices. And that hit the stock pretty hard. It was down almost 10% on the week. And that's the big problem with Tesla, right? I mean, Tesla is a good company. There's a couple glaring problems. So the first one being they have an incredibly high valuation, right? They have a price to free cash flow of 142, which is just crazy expensive, right? I wouldn't even be touching it until it was like definitely below $100, at least based on current levels of earnings, right? And the other big problem too is that the car industry is typically it's not overly profitable, and the other big problem too is that it typically is very competitive, right? So again, Tesla's a good company, but I think it has a very high valuation, and I would never touch literally any company with a price of free cash flow of this expensive, right? It doesn't matter how fast they're growing, right? It's just too expensive. So just my opinion there. The next one is Netflix, right? Again, Netflix subs were up, revenue was down though, right? So the one big problem I believe with Netflix is how are they going to maintain their market share, right? I mean, you have so many competitors, and when they first came out, they were the only dog in town, right? They were the only dog in town. Now there's Hulu, like, Disney Plus, the list goes on and on and on and on. Right? So I think Netflix is going to have a very hard time being competitive. No, it's not that they're not still going to be the leader, because that I think that's probably going to be the case. But the problem is that the industry they're in is going to become super competitive, right? And again, I think Netflix is still expensive, right? I mean, let's look at where it's at. Price of free cash flow of 44, right? That's still expensive, right? I mean, I don't think I'd maybe pay 30, maybe 30. But that's probably the highest that I would go, right? So their stock was also down on the week. Let's see exactly how much, about just over 5%. So again, a lot of these companies, this is another big problem with buying these companies that have these very high valuations, is that if there's any bad news, they're going to get hit hard. They're going to get hit very hard. So that's another thing that's concerning. The next one to talk about here, Bank of America. We had a lot of the banks release over the last week or two. This is a company you're not going to see crazy growth from. You're buying it for the stability, right? They beat earnings and revenue. The stock was actually up pretty nicely on the week. Let's see what it was up almost 9%, which is crazy for a company that is so slow growth as this. But I mean, honestly, in my opinion, the main reason you're buying this company is the dividend, right? I mean, you got 2.75% and they're growing at 12% a year. Payout ratio is about 26%. That's the main reason you're buying this company, in my opinion, right? Not for the growth, right? Not for the growth. I mean, if we look at stock growth, let's look at it over the last 5 years, just out of curiosity. Yeah, so I mean, it's basically flat. I mean, 5 years ago it was at 31. Now it's at 31.52. It's actually down slightly, which is actually kind of surprising, but it is down very significantly since November of 21. It got up to $49 a share. It'll probably take a while to get back up there, but again, that is good news that the banks seem to be okay. It's not that we're out of the woods yet, but the banks do seem to be okay. The next one I wanted to talk about is Charles Schwab. They beat on earnings and revenue. This is a company that got hit really hard in the whole banking crisis. They went from like $80 all the way down to $47, which is how much of a drop is that? It's 37%. That's just crazy. But they are up. They are up about 20% since then, which is nice. This is a very large company. Again, I don't own any of the companies I've talked about yet. They are actually growing their dividend very nicely, which is good to see if you own it. But I think that there's just better alternatives. Not that it's a bad company. Although I was very tempted to buy it when it was right at the bottom there. I actually remember thinking about it, but I never did for whatever reason. The next one is Crown Castle. This is a data center REIT. I like this company. I do not own it because I think EQIX is better, but I don't own it for that reason. But I do think it's a solid company. It beat on earnings and revenue, although the stock was actually down, surprising on the week, about 6%, which is a little surprising, but whatever. The next one is, and the dividend, this company is a crazy good dividend right now, 5.84%. Again, it is a REIT, so the payout ratio is going to be high. It has gotten hit very hard recently. It has gotten hit very hard. Let's look at it year to date. Year to date, it is down 25%, which is kind of surprising considering we have, most things are up this year, a lot of times quite a bit. The next one, this is the first of the ones that I've talked about that I actually do have a small position in. Steel Dynamics, they beat on earnings, but they missed revenue. And let's see what the stock did. They're up a little bit on the year. On the week, they were down. Not super significant, but again, this is a very solid company in my opinion. Always going to have demand, and again, it's got 17% growth rate on that dividend, which I very like. That's one of the main reasons why I'm buying it. And again, it has a very nice earnings yield as well. What's their earnings yield? 20%, just crazy good, right? That they're going to have a lot of room to grow that dividend. I think this is a company you're going to have a crazy nice dividend yield in the future on. The next one is USB, which is technically a regional bank, but is a very large company, actually $58 billion. They beat earnings. So again, the banks were very good, right? And that's good news for the economy, at least in the short term. No one knows what's going to happen in the long term, but in the short term, things do look to be okay. This company also very nice dividend, 5%. They're growing at almost 10% a year, which is very nice. The next one I wanted to talk about is American Airlines. Again, don't own, but I like watching because, again, airlines are a decent barometer on how the economy is doing. They beat earnings, although the stock was down on the week. The next one is a company that I've really wanted to get into, but it's came up so much that I haven't got a chance, and that's D.R. Horton, right? So they beat earnings and revenue. Housing starts are up. This company is actually up a lot on the year, which is why I haven't got into it. This is actually one of the better companies to have gotten into this year. It's just up a crazy amount. It is up about 40%, which is crazy, especially for a company that's not like a big growth stock or anything like that. But this is one of the big home builders, right? And they've done very well, right? They've done very well. They're growing their dividend very nice, which I like to see. This is a company that I'm going to look at getting into, but I think we're going to have to wait until we see some weakness in the housing market before you get into it. The price of free cash flow is actually still pretty good, but it's gone up so much. I'd like to see a pullback before I get into it. The next one is Freeport-McMoRan. They beat earnings and revenue, so again, that's good news there. Again, I don't own this company, but I do like watching it just out of curiosity. I think that the demand for copper is going to go up over time, so companies like this probably are going to do good. The next one is Intuitive Surgical, I believe that's how you pronounce it. This is a company that I want to get into, but it's had such a crazy valuation, I've never been able to get into it. They beat earnings and revenue. So again, that's good news there, although it looks like the stock was down, which is actually a little bit surprising. The last one, which is another one that I do have a position in, American Express, they beat earnings and revenue. Again, this is the company that you're not buying for crazy growth, but I think it's just such a solid company. I mean, Warren Buffett always gushes about how good of a company it is. And again, the numbers bear that out, right? I mean, what is the dividend here? 1.41%, they're growing at 11% a year, but again, the payout ratio is only 25%, so they're going to keep growing that very nicely over time, which is exactly what I want to see. And again, this is a company that they've always done very well. They're well managed, very well managed actually by the looks of things. And look at again, the price of free cash flow is 8.4. Again, 8.4. That is a very good discount, at least by the look of the numbers, right? So. Anyway, that's what I wanted to bring up today. As far as the market goes, I usually mention that at the start, but I'm going to mention it at the end. We're not that far off all-time highs, and there's going to be a pullback at some point. It's just a matter of, is it a 5% pullback? Is it a 25% pullback? And when does it happen, right? Does it happen next month? Does it happen at the end of the year? Is it early 2024? It's going to happen at some point. It's just a matter of when, right? And that's a concerning thing. But again, if you're a long-term investor, you do not care about that, right? You really do not care about that. And if you're a trader, okay, sure you care, but that's a lot harder to predict, right? So anyway, that's what I wanted to bring up today. I will do this again next week. I virtually guarantee there'll be a lot of companies to talk about again. So again, if you liked the video, please comment, like, subscribe, all that good stuff, and stay tuned for more.